c'est l'objectif de... Donc on va démarrer, sachant qu'on a une contrainte pour les gens qui veulent aller faire la prière du vendredi. On va essayer de terminer vers midi 30, midi 35. Donc on va demander à notre intervenant de le faire en 20 minutes à peu près. Ouais. Bon, les gens qui peuvent y aller, qui veulent y aller, ils peuvent aller.
I'll finish it in 30 minutes.
25.
I'll try my best because it's an explanatory. So what time is it tomorrow prayer? 12?
It's half.
I'll try. I'll watch it.
Donc là c'est une intervention qui va nous présenter une étude de cas réelle où il y a une convergence des différents types de produits et comment l'interaction avec les différents produits. Donc bien sûr, on ne va pas nommer de quelle banque il s'agit, étant donné que c'est basé sur des éléments confidentiels. En tout cas, c'est un retour d'expérience, c'est une étude de cas d'une banque réelle qui utilise un certain nombre de produits et comment tous ces produits-là, tous ces produits islamiques convergent et comment se font les interactions avec les différents produits.
Bismillah ar-Rahman ar-Rahim. This is the case study, and this transaction was being executed in 1986 by a well-known Islamic bank along with 28 banks. Unfortunately, I am not supposed to take the name of the banks because due to a commercial reason, but I'll go straight, and I was a part of that transaction, and we conducted this transaction for the period of 9 years, and every year we paid the profit. My topic is, as you have read over here, application of Islamic financial products. Now, it starts from an instrument which has been called as a sukuk. You must all be knowing what is the difference between the sukuk and the bond, I think. And sukuk is not an unknown product. It's basically a product that develops an equity base for a transaction or a project with a capital contribution. It's a non-debt-based instrument. The Pakistan export market for the rice was very weak in 1987 due to the Afghan war. The liquidity crunch was there. In this situation, the government of Pakistan has requested one of the leading Islamic bank of Bahrain to finance a rice product and a cotton product with a $650 million. Finally, the Islamic bank entered into the syndicate financing with 28 banks. Over here, we are going to take only 4 banks as an example. Sukuk for the transaction under trade financing and financing by using 4 methods: sukuk into mudarba, mudarba into musharaka, musharaka into ijara, murabaha, and then ijara in a single transaction. This transaction is not only brings out the fortune for the investor also, but it also set a trend that changed the traditional customs of Pakistan growers market, where the landlord exploit the growers for the payment of the crop. Let's see how the mechanism work. And very first stage was to collect the money. So 4 banks enter into the contribution of funds, and the funds that has been received by Bank 1 is $45 million. The second bank invested $65 million, third $70 million, and the fourth is $100 million. And the total number of sukuk which was being issued was the 28,000 at the rate of 10,000 rupees, $10,000 per sukuk. The equity participation ratio is 16.07, 23.21, 24.5, and 35.71. Now this money which is being collected through sukuk is being given by the bank to Bank Muslim Limited. Now Bank Muslim Limited is basically entered into a mudaraba, became a mudarib, and the Rabbul Mal is the 4 banks who contributed into it. And the terms and conditions that has been set by the sukuk was the profit ratio is going to be shared into 20-80, the 20 for Bank Muslim and 80 for the Rabbul Mal, with 2% management fees to organize the whole system. Bank Muslim enter into a musharaka with Central Bank of Pakistan, because when you invest the money into a Pakistan, you were not supposed to deal into a foreign currency. So the State Bank of Pakistan has taken a priority of dollar and make it into a Pak rupees of total capital that has been invested. In addition, State Bank of Pakistan prefer to go into a musharaka rather to apply a rate on it. That was an achievement which was being seen in this transaction. That everything is going on to a ratio, nothing is going to be applied on the rate basis. So Central Bank enter into a musharaka by 595 ratio. So Central Bank added its $5 million with 280 million contribution. That brings the capital of the musharaka is $285 million. Central Bank is basically now act as a Rabbul Mal and enter into a ijara financing by going into a rental ijara properties in which they have taken one warehouse, a large warehouse where have a storage capacity of 1 million ton of rice. It's in the Karachi city with a very, very big installation of a processing unit which is being taken at the price of rupees, of the dollar is $15,000 per month with the expenditure of about $1.5 million. This facility was being taken and was being given to 4 commercial banks operating in Pakistan, and they were being assigned to be the agent of State Bank of Pakistan. Now, State Bank of Pakistan enter into a murabaha transaction with Rice Milling Corporation of Pakistan, who are dealing into a rice by procurement, processing, and exporting to the different countries of the world. But due to the liquidity crunch, they could not go into direct purchasing of the rice because of the private sector was very strong. Now, Rice Milling Corporation of Pakistan agreed to participate as a Arbun in the Murabaha transaction by contributing its 10% equity into it, thus bringing the capital into $313.5 million as a Murabaha purchase capital. Now, Central Bank invested 90%, Rice Mill Corporation invested 10%, and it was being agreed that the Central Bank is going to give 6% as a cost of product, as a selling expenses, which is going to be on the basis of the gross profitability, not on the basis of the principal amount. Because in Murabaha, you cannot calculate a rate on the principal amount by not making a money into a commodity, so you have to rely on the gross profitability. The condition was there that if there is no gross profitability, there will be no management fees, there will be no selling expenses, and there will be no profit. Now, we have 285 million as a capital of the Central Bank and 28.5 million contribution, Murabaha, from the Rice Milling Corporation of Pakistan. Now, the arrangement was being made, as I told you before also, that central bank has appointed 4 local banks to act as a muqaddam. In Murabaha, the Rabbul Mal should not pay the money to the Murahib. Why? Because Murahib cannot become an agent of the Islamic bank. Reason behind it that then there is going to be a chances of exploitation towards the financial facility that has been given by the Islamic bank. And the costing of the transaction cannot be relied upon. So 4 banks, commercial bank, having a branches of 3,000 branches all over the Pakistan, having the rice area branches were about 1,600 branches were operating. Now these commercial banks authorized to pay on behalf of Rice Mill Corporation against procurement of rice for the local growers. Direct payment to discourage old and orthodox method that proven exploitation to poor growers. Now, it was a traditions in Pakistan and India that when growers brings their product, the buyer does not pay the 100% price upon the delivery of the good. They give it 20%, and for the whole year, they spread the payment. Why they do it? Because they exploit it. There's a great exploitation that if you pay the money to the grower, the next year the grower won't be coming to him, or he'll be going somebody else. So keep the grower intact. They never pay the 100%. What we did it, we said no. Brings your good in our godown, take a delivery note, go to the commercial bank, put the GRN, good receipt note, to the counter and take the money. Now, one thing that we did it, we said to the growers, you want cash or you need an alternate. If you take cash, it's very risky because every grower who's coming up was bringing tons of rice direct to the godowns. So the money was around 2 million, 3 million, 4 million, and as you will. So what happened is that the grower said, no, we want to open an account, but we cannot write and read. So he said, okay, we'll make a passbook with your photograph and your stamp. So the money that was supposed to be given to a grower were being open an account. I'll tell you one thing, and I remember that over 47,000 accounts were being opened in the different commercial banks for the growers. And that brings out a tremendous change in the growers' mentality because they understand now the money is risk-free because it's lying in the bank and they have got confidence on the bank. So the money which is being collected as a capital is being disbursed to the Pakistani bank for the value of 78 million to first bank, 78 million to second, 78 million to third, and 78 million to fourth bank in Pak currency, not in foreign exchange. So, and it has been said that these commercial banks will be getting the handling commission on it. The procurement has been started. The rice price that is being set was $242 per ton. With all that brings the costing, in which 6% is the selling expenses and bank commission is a 4% of the amount that is being disbursed to the commercial bank. That brings out $311 per ton was the cost price of the goods. Now, each commercial bank, as a handling fees, they receive $1 million at the end of the transaction. And 1 million ton of rice is being procured in just 3.5 months, giving 250 each bank have received the rice. This rice was being kept for a processing by Rice Milling Corporation of Pakistan, and export product is being prepared at a cost of $2.5 million. That brings out the 313.5 as the purchase cost on the stock of 1 million ton of rice. Now, what we have did it, we went into the international market. What we did said, we have asked the Bahrain bank to talk to the consortium bankers so that they can look a market for Pakistan rice so that we can supply the rice directly to the buyer. So the respective bank have looked into their own territory, who are the buyer of the rice. So they open direct letter of credit on State Bank of Pakistan in the name of Rice Export Corporation, and it was being said that all the rice of 1 million is going to be exported to different banks who are also the sukuk holders also. Now, the rice sale price was set up to the $390 per ton. With that, we have received $48 million as a profitability on our export at the close of 6-month transaction. Then this $48 million is being distributed on the basis of the equity participation ratio, in which 43 million is being gone to the central bank and 4.8 million is being received by the Rice Export Corporation, Rice Milling Corporation. Now, the Rice Milling Corporation earning is, in Mudarba sale, they receive 6%, 6 million, plus Mudarba profit, they receive 4.8 million, giving them $10.8 million on their financing of $28 million of the contribution as Arbun. The central bank moved to Muslim Bank now. Now Musharka profit has to be distributed, and on Musharka profitability, $4.3 million is being received by central bank, and 38.8 million is being received by Muslim Bank. We go again back to, move to again, and now Muslim Bank is now ready to pay to its Rabbul Mal. How they have set up the arrangement and terms were the profit 2080 and 2% management fees, which comes to $38 million is being deducted with management fees, 777,000, and profit of Mudarib was $7.6 million. So this amount and this amount becomes the earning of Mudarib, leaving the net profitability to the sukuk holder $30.48 million. Now the $30.48 million is being divided by number of sukuk, giving per sukuk profit $10,000 value of profit of sukuk, got the profitability 1088.64. As a result, you can very well see the first bank having a 16.07 ratio got 4.8 million. The second bank, 65 million, 23 is a ratio, they got 7.076. The third bank was 70 million, they got 24 million, 25%, so they got 7.6, and the last bank got 10.86 million. They all got it profit according to the ratio of investment. Now, before I close down this, let me tell you one thing. In the Islamic financial system, one thing is very, very important, and nobody accept this reality while going into a financing. I, with my own experience of about 29 years in the financial and corporate finance, I believe in one thing. Whenever you apply a rate, you make the money into a commodity by pricing to it. You have to go into a ratio. You have to apply how much of funds is going to be injected in a transaction. And the profitability has to be divided according to the ratio of investment instead of going it. Now the question arises, when you work for an Islamic bank, what you do? You give the money to Islamic bank. So what is your status with Islamic bank? Can you tell me? What is the status you hold it while you deposit your money with Islamic bank? Anybody? You are a participator, a partner, shareholder. Now, when Islamic banks say, I will give you 10% profit, now what means? What is the meaning of that? I'm just asking you, please. If Islamic bank says, I will give you 10% profit on your deposit, what it means? It means the transaction is not transparent. Why? Because what Islamic bank is making it up, the shareholder doesn't know where the money is being invested. Or the conventional bank, that doesn't tell it. Why? Because I, as a partner who deposit the money for a participation, have a full right to know where the money is being invested and who are the other shareholder. Now, how can I boost the saving conduct? I can only boost the saving conduct if I know it, that what funds I am going to invest in it, where the fund is going to be invested, and how much profit is being realized. One of my banker, he said that we are issuing the investment certificates. Now, what is the difference between a bond and a sukuk? Can anybody tell me what is the difference between a bond and a sukuk? Yes, please. Sukuk is basically a non-debt-based instrument. Bond is a debt-based instrument. Sukuk cannot be exchanged. Sukuk cannot be discounted. Sukuk cannot be transferred. Sukuk are for the specific purpose. Sukuk cannot be kept as a collateralization for taking the loan out of it, because the sukuk does not have a face which says it, you will get 7.8% cut. It says very clearly, the profitability is going to be disbursed upon the maturity. We have, unfortunately, taken a wrong perception that sukuk are the bonds. Bonds are totally different concept. Sukuk are totally different concept. Yes, please.
Les sukuk correspondent à un projet financé et non pas à une échéance telle que les obligations.
Translation. You are absolutely right. Sukuk cannot be issued until and unless sukuks are having a purpose. In sukuk, the issuer has to contribute his equity also, to give a confidence also. Sukuk is only and only issued for the commercial purposes, to give a boost to the saving conduct, to give a common man to invest a small investment as well as large investment or corporate investment, for taking an instrument to take a risk also, but if you take a risk, your profit is high. Islamic finance basically work on a very simple formula. Shorter is a transaction, higher is a profit. So sukuk are preferred to be a short-term transaction. That is why they say that if the sukuk are short-term transaction, it gives them better profitability.
Apparemment, on est passé directement aux questions-réponses. On va se prendre quelques questions. Qui a encore une intervention, une deuxième? Là, c'est la liste définitive, parce que là, on doit terminer pour un jour. Donc, une première et une deuxième question. OK.
Excuse me, you said, or correct me if I'm wrong. Yes, okay, correct me if I'm wrong, but you said that sukuk cannot be traded? Or, because I think, as far as I know, sukuk, there are secondary markets of sukuk. And I think that Malaysia has issued the sukuk of 3 months in order to give liquidity to Islamic banks.
No, I said that sukuk cannot be transferred. Sukuk can be traded into secondary market, but the second sale cannot be traded. Once the sukuk is being issued, then sukuk cannot be traded. It cannot be discounted. It cannot be transferred. It cannot be in cash prior to the maturity, and it cannot be kept as a collateral for the further financing. So sukuk are traded in the capital market, in the secondary market also. But once the sukuk is being issued in your name, then you cannot go and tell him, you can take my sukuk and give me this money, less or high, because you don't know the result. The result is not being identified on the face value. We cannot say that the sukuk is going to give you a return of 8% cut, or 9% cut, or 10% cut. Okay, now sukuk, if you have a long-term sukuk, then sukuk periods are going to be set up in a way that the profitability is going to, like we did it into this, that we have a 9-year contract with the Rice Milling Corporation, and every year, after every 11 months, we close down the transaction, take the proceed, calculate it, and realize the profitability and distribute the profitability and return the principal amount also. And when we return the principal amount, every 13th month, again the funds have been contributed. I'll tell you one thing. We started with 280 million, and in 8th year, we were being offered funds more than $1.7 billion. Everybody wants to invest the money, especially the non-Muslim organizations. They says, the institution, the non-commercial banks, they said, we want to invest it and we want to invest according to, but the religious supervisory board said, no, you cannot take the money from those commercial banks who are involved into a riba transactions. Not the interest transaction, but the riba transaction, because non-transparent activities fall into the category of riba. And so, we cannot take the conventional banks. Any other question?
Hello, the last question, and the answer in less than 1 minute, please.
Well, I've noticed that in your case study example, the profit sharing proportion is based on the equity injection of each bank among the 4 banks. To my best level knowledge, from my understanding, in a musharaka sharing mechanism, the sharing is based not on the equity capital injection, the proportion, but it's based on the pre-agreed or predetermined sharing agreement on a proportion of sharing proportion agreed in advance, not on the equity injection of each partner.
You are 100% right. This is an example. This is just an example. Basically, in Mudarba, in Musharka, in Murabaha, the 3 product demand the pre-agreed profitability on the basis of investment, equity participation, as well as on the basis of the responsibilities and duties that has been taken. Like suppose a person is a sleeping partner, then the working partner is authorized to take or claim the management fees also. So that a share goes high. Plus, the profitability that is going to be shared is in accordance to the pre-agreed terms. It is not that you're going to take 5% or you're going to take, but every profitability has to be taken out on the net profitability and not on the principal amount.
Thank you, Mr. Hasan. Donc là, on va prendre la pause déjeuner et on reprend aux alentours de 14 heures. Merci beaucoup. Thank you.